Hello and welcome back to followers of the Kaspa journey. Now, in light of some of the most recent price action on Kaspa, today's video is going to be taking a look at some of the technicals and price action on Kaspa and try to figure out if the risk is currently to the upside or to the downside. But before we get into it today, guys, don't forget to like and subscribe and also turn on post notifications so that you don't miss any of my future videos. And also, for those who are interested in more in-depth videos like this and more in-depth analysis on Kaspa, don't forget to check out the Patreon to join a private trading community. So Kaspa has obviously recently had this pretty major sell-off, coming down from around the 18 cents level, touching the 12.5 or 12.5 cents level. And so the thing is that this is fairly normal price action for Kaspa and has been a relatively normal and standard pullback for Kaspa. But a lot of the reason why this pullback in particular has felt so extended is because Kaspa's relative strength against the rest of the market has been pretty abysmal during this entire period. And really for the last 2 months or so, Kaspa has been trending down against the rest of the market while a lot of these other projects have had parabolic moves. So that is definitely one of the reasons that this pullback has felt so extended. But when you look at this pullback in relation to the other pullbacks that Kaspa has had, then this price action is fairly normal. So from a timing perspective, most of these pullbacks last around 70 to 80 days. So this first one here at the end of 2023 lasted 80 days. This one here in early 2024 lasted a total of 72 days. And this one currently is sitting at around 70 days, or currently 71 days from the peak. So from a timing perspective, this is very much normal and expected behavior from Kaspa. And if history is anything to go by, then likely this dip could well mark the bottom if this cycle turns out to be similar to the other cycles. And looking at the cycles of Kaspa, they all have a relatively similar fractal in terms of the price action that we see during the sell-off in the cycle. So if we take the drawdown in the previous 2 cycles and we take the bars pattern from that and we overlay that next to the current drawdown that we are experiencing, then what we can see is that this drawdown is following basically the same fractal of the prior 2 drawdowns. So what I mean by this is that during these drawdowns, there is an initial sell-off that lasts for around 30 days or so, and around 1 month. And that would correspond to this point, and this point here. And then after the 30 days, you get a impulsive move that appears to sort of break the downwards trend line of the initial sell-off. And so that then appears like the drawdown could be over with this sort of impulsive move up. And then the price action then goes into a kind of plateau, or a relatively flat sort of structure with a minor dip in the middle and then another move up. But the thing with the second move up is that the second move generally fails to break the prior local high of this high here. And so the realization that the downtrend is in fact not over sets in, and then another quite sharp sell-off occurs. And so based on this fractal and based off this price action, that would indicate that the sell-off that we have just had could well mark the bottom if this cycle turns out to be anything like the prior cycles and the prior drawdowns. And from a drawdown perspective, the drawdown has been relatively normal as well, with the drawdown in late 2023 being around 40%, the drawdown in early 2024 being around 45%, and the drawdown that we have just experienced has been around 40%. So when compared to history, this drawdown is absolutely nothing to be worried about, and the price action is very similar. But arguably it's just felt a lot worse than it has because of the relative strength that Kaspa's had, and the fact that a lot of other projects have had parabolic rises and gains of 100 to 200%, whereas Kaspa during this period has basically just been bleeding and has had very, very little buying demand. But the thing is, for those of you who have been in Kaspa a while, we've had periods like this before, like in the early 2024 sell-off. A lot of the rest of the market was trending up during this period. So this entire sell-off felt particularly nasty because of the fact that Kaspa was just trending down and had absolutely no demand, while a lot of the market was either trending up or flat. So the price action has been very similar in this drawdown, in the sense that, we set an all-time high while a lot of the rest of the market was kind of flat in this period here. And then while the rest of the market was pumping, Kaspa was just dumping. And that's very similar to what we've had here. We've, set an all all-time high in this period here where we had incredible relative strength against the rest of the market, you know, setting an all-time high while most other projects were down sort of 70 or 80%. And then, you know, shortly after that all-time high, we have another sell-off while the rest of the market is pumping and going parabolic. So, you know, this sell-off has actually been incredibly similar to the prior sell-off in terms of the situation of recently hitting an all-time high, in terms of timing, in terms of drawdown, and in terms of price action. So a lot of people have been talking about the Wyckoff distribution schematic and, you know, whether this recent range and kind of 9 to 10 month range that we have been in now represents a distribution period. And if it has represented that distribution period, then that indicates that Kaspa could be going a lot lower to, you know, around the 5 cent level, or at least definitely breaking the 10 cent support. And so I don't think that this is accurate, and I'll get into why. But first of all, we're going to kind of do a bit of a deep dive into what a Wyckoff distribution is. So first of all, to truly understand what a distribution phase is, you need to understand the 4 stages of a market. And this stage analysis was originally sort of discovered by someone called Stan Weinstein in his book Secrets for Profiting in Bull and Bear Markets, which is an incredibly useful book if you are interested in more in-depth technical analysis. But basically, the idea is that there are basically 4 stages to a market. So stage 1 is the accumulation stage, and this is a period of sideways price action, generally relatively low volatility and relatively low volume, where there's basically no interest in the stock or asset. And during this period, institutional players and also smart money are accumulating. And then once enough of the supply has been bought up by institutional players in stage 1, that will then allow price to sort of break out of the range in stage 1 and into stage 2, which is basically the markup phase. So this is where price increases, and you know, you'll obviously have dips on the way up the markup phase, but generally overall it is a period of price expansion. And generally during stage 2, it's either, you know, momentum traders or the slightly late smart money getting in and buying these dips, and then that brings you into stage 3, which basically is the distribution phase. So the institutional players and traders and smart money who were buying during stage 1 and stage 2 now have the opportunity to basically offload their assets. And generally in stage 3, it is kind of retail and dumb money that is buying, that have little to no interest in markets and have basically just heard about this asset that's been doing incredibly well and decide that they want to get a piece of the action. But of course, you know, stage 3 is not the time to be buying. That is in either stage 1 or stage 2. And so stage 3 really is the opportunity for smart money to sell as much as they possibly can to dumb money and to the laggards. And so, you know, a Wyckoff distribution basically is a more in-depth look at a stage 3 distribution phase where smart money is offloading their asset to dumb money. And, you know, the really key thing here is that a Wyckoff distribution is kind of not natural or organic price action. A Wyckoff distribution happens when you have market makers who own a significant portion of the assets and a significant supply of the asset basically manipulate prices in order to manipulate and play with the emotions of dumb money in order to sell as much of their asset as possible and offload as much of the asset as possible, because it's easier to do that during a long distribution phase than it is during a blow off top. Whereas, you know, a blow off top is kind of a more natural price formation, and blow off tops happen when kind of market euphoria kicks in, but there aren't really any market makers to manipulate prices, and they occur, you know, when there are sort of individual participants of the market. So the characteristics of a Wyckoff distribution are as follows, and you know, each Wyckoff distribution is unique. No two will look exactly the same, but the general characteristics of a planned distribution will look relatively similar. So initially you have the preliminary supply, and that basically is the first point of resistance after the uptrend. So, you know, price will generally bounce off this area for a short amount of time, and then that leads into the buying climax, which is basically the peak of the buying power. And this is kind of the first major opportunity for market makers to unload a significant amount of shares. And then after that, you get the automatic reaction, which is basically just the automatic sell-off that any asset will go through after price gets too extended. And then after that comes the second test, which is essentially just the retest of the prior buying climax. And then one of the key aspects of a Wyckoff distribution, and almost all of them will contain this, the sign of weakness, is the breaking of price below a particular trend. But one of the key things to note is that the sign of weakness almost always should break below the preliminary supply. And that is kind of the first indication that something is potentially wrong and that the asset is not as strong as it was in the past. And then you get the upthrust in phase B, and phase B is essentially the distribution phase. And this basically just represents the second opportunity for market makers to unload the asset to dumb money. And then after that, you get the upthrust after distribution, which essentially is just the third opportunity for market makers to retail and essentially can be viewed as a bull trap. And then generally you'll have a upthrust after distribution test, or a test of the key resistance levels. Then after that, you'll generally have a last point of supply, which essentially is just a small rally in the downtrend of the distribution, or kind of the start of stage 4 of a market cycle. And then you have a sign of weakness phase D, which, you know, very key, has to break below the prior sign of weakness in phase B. And so now here I'm going to talk about why I don't think this fits the range that Kaspa has been in particularly well. And on the top, we have the price action of the Bitcoin top in 2021, which was kind of a classic Wyckoff distribution. And so, you know, one of the first things that indicates that this isn't a particularly good fit is the, you know, supposed show of weakness that Kaspa was supposed to have in the buying climax, after the buying climax. And the reason that I don't think this is really a show of weakness is because the price in the show of weakness doesn't go below the preliminary supply, or kind of the first pullback of the buying climax. So, you know, I really wouldn't consider this sell-off here to be a show of weakness. In fact, this was actually an incredibly minor drawdown compared to some of the others that Kaspa has experienced. So I would definitely not consider this to be a show of weakness. Then, you know, arguably you could argue that was an upthrust, and then the pullback after the upthrust, and then another upthrust after distribution, which is, you know, very similar to the price action that Bitcoin had in 2021. But then one of the key things is that the sell-off of the upthrust after distribution in Bitcoin was lower than the sell-off of the upthrust, which, you know, was kind of the first sign that something was wrong during this period, and basically foreshadowed the later sell-off in Bitcoin, whereas the sell-off in Kaspa was a lot higher. And so it doesn't really fit a distribution schematic. But, you know, it does have to be noted that if this truly is a Wyckoff distribution, then it shows that we are likely going to at least sub 10 cents. So, you know, there is that possibility, but in my opinion, it doesn't fit particularly well. What I actually think fits a little bit better was the most recent cycle that we had, where Kaspa reached the 20 cent range. So I think arguably there's a smaller Wyckoff distribution at play, and instead of, you know, the entire range of this basically 9 to 10 month range, that we've had a smaller, you know, 3 or maybe 4 month Wyckoff distribution going on. And I'll explain why I think this is more reasonable in a bit, but first we're going to have a look at the price action. So, you know, initially you have the preliminary supply, which is kind of the first point of resistance in the uptrend. Then you go up into the buying climax. Then after that, you get the automatic reaction, which is kind of a automatic upthrust. And then after that, you get the show of weakness. And I think this show of weakness fits a lot better than the prior one, because this one actually takes out the previous preliminary supply. So that shows that, you know, there was true weakness in Kaspa during that period. And then you get the upthrust, and then the upthrust after distribution, with the upthrust after distribution making a slightly higher high. And then key here is that the sell-off after the upthrust after distribution actually went lower than the sell-off during the upthrust, which fits much better with the Wyckoff distribution from Bitcoin in 2021. And if this truly is a Wyckoff distribution, then that shows that likely we have seen most of the downside that we are going to see, because we have already taken out the prior show of weakness. So, you know, it would potentially leave a little bit more room for downside, but likely we've had most of the downside that we are going to experience. And so the reason that I think that this one on the right is more likely than this one on the left basically comes down to the fact that a Wyckoff distribution is a planned distribution by market makers, essentially market manipulation, although I never really like to use the word market manipulation. But, you know, market making by people who've gotten in very early and control a significant amount of the supply and want to offload as much as possible to retail. But the thing is that that doesn't really apply to Kaspa, because it is such a new and such a low market cap asset, that the only people that have really gotten in so far is early investors, early retail, and early speculative miners. And no institutions have really been able to get involved in Kaspa or build a huge position in Kaspa until around, 6 to 7 months ago, with Marathon and likely tier 1 exchanges accumulating. But so it's very unlikely that any big institutional players have a big enough position in Kaspa that it would make it sensible to perform a distribution where they can offload most of their assets to retail, especially considering that, likely we are still midway through the bull market and that very likely crypto will be a lot higher in a year's time than it will be now. Whereas a kind of smaller scale Wyckoff distribution would be beneficial to the institutional players that are involved, or in other words, the tier 1 exchanges, who are likely still accumulating and still building their positions in order to list Kaspa. So that would therefore prevent price from getting away too fast and also manipulate the emotions of market participants in order to cause a bit of a sell-off and then provide the opportunity for the tier 1 exchanges to buy at these low prices. And so that would explain why known exchange holdings have been rising during this period, with exchanges, clearly taking advantage of this suppressed price. And clearly they were using the distribution phase to unload holdings and, potentially suppress price in order to cause a bit of a panic and cause a bit of a sell-off so that they can then buy back at lower prices. And this would also help explain why Kaspa now has 2 Aquaman, with an Aquaman being someone with holdings of more than 1 billion Kaspa. So, rarely all stars align together perfectly, but currently sentiment is at its worst, retesting support, stochastics at the low, which historically has precisely marked the bottoms of Kaspa, RSI is oversold, MFI is oversold, and volume is picking up. And every single time the 9-week exponential moving average on the Kaspa chart has begun to drift down, it's presented a large buying opportunity. And currently that is what we are seeing with the Kaspa chart. And based off history, when Kaspa touches the lower support trend line, that has generally indicated a good place to buy. And while a Wyckoff distribution is a possibility, it is also possible that we have been in a accumulation cylinder with a widening mouth, which was a stock pattern originally proposed by Jesse Livermore. And also shout out to Jim Skibum, who noticed that the current price action may be resembling an Elliott wave running flat pattern. So now we're going to go over kind of what I see as the worst case scenario and the price action that I would very much like to avoid on Kaspa at the minute. So, currently we have this downward sloping trend line, which will almost certainly act as a key point of resistance in the future. So in my opinion, the worst thing that we could see right now would essentially be a bounce from these lows, but then the bounce from the lows begins to form kind of a rounded top at the trend line of resistance, because a rounded formation in any market generally represents exhaustion. And I think if we do see price action similar to this, then it's quite likely that we will come down again to test the 12.5 support line, with the 12.5 level kind of acting as the key area of support now. And so if we do get this weak impulsive move and then this rounded formation, I think it's likely that we will test and possibly break this key 12.5 area of support. Instead of a rounded formation, I would much prefer to see a quick impulsive move and then in fact a relatively quick pullback as well, especially if this impulsive move can take out the 15-cent area. Then I think that would be a lot more bullish, and this sharp pullback would likely turn into a dip buy, where we would then break the resistance trend line. Or what would be more typical to see at a Kaspa bottom would be basically a more rounded bottom. So you'll notice that the vast majority of the bottoms of Kaspa generally take on basically a rounded formation, and it's fairly rare for them to be kind of a capitulation event. In this May 23 sell-off, we did have what I would consider a capitulation event, which then kind of turned into a rounded bottom. But again, much more common in the bottoming formations of Kaspa is basically a rounded bottom and, often a double bottom. So that's why I wouldn't mind to see kind of a double bottom forming here, or a more, rounded bottoming formation, because that basically represents a gradual shifting of price momentum from the downside to the upside, and is generally a very organic way for all cryptocurrency to bottom. And so really those are the 3 scenarios that I can see going forward. We either have a strong impulsive move and then a sharp pullback, which would likely be a good dip buying opportunity and allow us to break this overhead of resistance trend line and ideally have a close above 17.5 cents, which would essentially rebuild the bullish structure that Kaspa has. The second scenario that I would like to see is a rounded bottom forming, because that basically indicates seller exhaustion and is typical to see for the lows of Kaspa's cycles. And the worst case scenario, I think, would be a weak impulsive move, which starts to turn into a rounded top with declining momentum and would represent a rejection from this resistance trend line and the continuation of the downtrend by forming a lower high. And so in that scenario, I think it's very likely that we would come back to 12.5 cents to test this key area of support, and it makes it more likely that we would lose that key level of support. So overall, there's a lot to be bullish about on Kaspa at the minute, with key bullish fundamentals such as tier 1 exchange listings to look forward to, as well as things like 10 blocks per second. But overall, in regards to technicals, Kaspa does have some overhead resistance and some headwinds that we need to break before we can continue to the upside and then continue into this next cycle. So I hope you guys have enjoyed this analysis. If you do want more like this, including to know when I am selling and when I am buying, again, don't forget to check out the Patreon, and also make sure that you don't forget to like and subscribe, and also leave a comment for the algorithm. But other than that, thank you very much for watching, and until next time, cheers.